Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is your weekend edition for September 20th, 2019, and we're about 3:55 p.m. Central Daylight Time. I wanted to get this out just before the settlement price because the gold market, as you can see, is near the highs of the day today. The silver market is doing the same. They won't settle there. They're going to settle lower because of where they were at 12:30 p.m. Now remember, on the weekend edition, we also look at one monthly chart, and then it's all weekly charts of trying to get the bigger picture. The event of the day, the setback of the day, I think, was the way that President Trump was talking about what's going on with China. First of all, maybe you be quiet while the negotiation teams are here and you're trying to get some goodwill going with the Chinese going to Montana and other parts then of the Midwest to look at, if you will, feed operations and farms. Well, the more he talked, because the Australian Prime Minister had come in and they gave him the 10-star, which they deserve, the celebration, come to the White House, all of a sudden, well, I don't know that we're going to want to do a partial deal. I don't know if it's enough. Then on the news wires I'm reaching, the Trump administration doesn't think an agriculture deal's big enough by itself. Okay, beans down 10. Take off in the metal markets. You can see it right here. Bonds and notes pick themselves up, and the stock market sells off a little bit on the news. I don't think any of us expected a deal. We expected maybe we can get steps of a deal, but it doesn't sound as though even that's going well. But let's go to the gold monthly chart. For the month, you finished down 6. Well, you're not through with the month, right? So at this point in the month, that's the way to look at it. You're down $6, $15.1670, which is still over the upper Bollinger Band. So you've got a little bit of premium built in that. Last month you closed over that 18-month average. This month you did right there, 14.26, and this month. So this could be, we're only mid-month. Please understand this. You could have another month there. We'll wait and see. It would be the month after that I would think the market will pull back then into the under the Bollinger Band, but not yet. Momentum is up, trend up, market still moving. When you look at the settlements on a weekly area chart of only closes, from the recent high close at this point, it's not settled yet. It's going to be down from here. You're about $10 lower. You're probably another 5 under that or so. When you look at the weekly chart, you can see how you came up and all of a sudden you're getting a market that's playing around here and you stepped out of a trend. The market has a low this week of 1484 that's under the last 92.90 and a higher high. So the market stepped out of its uptrend. The market still has upside bias as it is over the 18-week moving average of closes. The resistance came in at the upper Bollinger Bands. You'd hit them, you'd back off, and now you've moved to the sidelines again. Admittedly, we've got to get a lot of information this week to know what was really said. In terms of momentum, it's trying to turn down. You see how the red line is now underneath the dark and it's down to 79. It's trying to come down, but it's confused. We all got confused. I thought the Chinese were going to Montana this weekend, and I'm going, yeah, we're going to get something of a small deal, and that would make sense. Now, we may not get any deals. I don't know what happened today, and we'll find out as the weekend goes. When we get to GLD, the good news is this for the gold trader is still in an uptrend. You've got the higher lows, higher highs. Unlike the futures, it never took out a previous low. Similar to the futures, the momentum is acting like it wanted to turn down. For the week, the market is up, and I think it's going to wait and see what happens, just like we all are on the other information. And on GDX, you're out of a trend. GDX has a higher high and lower low. Because price is over the 18-week average, I say the bias is up, but I'm disturbed on the momentum, which has been pointing down. I don't think the miners are anywhere near as strong as GLD itself was. Now, when we look at the gold-silver ratio, it still favors silver over gold. You have a market that has been breaking down. It got as high recently on a weekly close of 93.85. As you weaken, Think of this, how many ounces of silver you'd have in a perfect world. You put in your shopping cart, you go to your gold store, forget commissions and everything, forget premiums that you'd be paying anywhere, and you're just saying, hey, I'm going to give you 84.5 ounces of silver. I want my ounce of gold. Up here, you had to give them 93.85, so silver became worth a bit more. The silver weekly chart looks better than the gold chart. It's got the clean pattern of higher lows, higher highs. It has been in a corrective mode. It just didn't enter it. It has been in one, as you can see, as I'm putting it back here. It began this week of September 6th. It corrected, kept correcting a little bit, and this is where you're at right now. So the question is this market ready to make another run to the upper Bollinger Band, or is it about to take out the 1740.5 zone and come back into this area? I'm waiting to see. Copper. Well, if the Chinese are leaving, I don't know that I'd want to own any copper, right? You got a lower low, higher high. All you did is you got down to these Bollinger Bands. You found support. You went back, got through this high right through here into the 18-week average of closes and ran out of momentum. The market is not trending. It's got a lower low, higher high. The bias is down, and momentum acts on this chart like it's petered out and could come down. If it does, look for support at the potential of the lower Bollinger Band. In the platinum market, momentum is gone sideways here. Now, price for the week is down $10, and if you take a look at what the market started doing, we had these 2 weeks where it got very, very strong, momentum up. Now you're over the upper Bollinger Band. 95% of the time, you're going to get back under that band. Generally, the most you get are 5 weeks in a row. I can't say that more can't happen of being over it on a settlement basis, but I can tell you, done my research, you go and count, and that's what I've discovered. If I'm wrong, write me on your YouTube and let me know. I don't think I am on the lead months, though. And in looking at it, the market started here. You finished at 952.20, just over 947.90, and this week you're back under it. That's my point. So now you're back within it. You haven't broken the trend. The trend is up. There's 2 support lines. Actually, if this 18-week average gets over the 100-week, I'm going to get real bullish on this market. In the Palladium market, this took over leadership of the market again. If you watch my daily work, you know that I've been saying that. This is a vertical price rise. It still hasn't hit the upper Bollinger Band, but it has gone up from 1405.10. It has not had 1 week where it's made a lower low, and it's soared up $250. That's quite a move. Momentum still up, bias up, not trending. What it did is when it broke down, it made a statement. It couldn't stay under the 18-week average, and it rallied on you. Now for the dollar index. Which side of the argument do you want about the dollar? The market fell back this week. This is how it looked last week. You're still in an uptrend. Went to the upper Bollinger Band. One of the things I often say is the first challenge of a Bollinger Band are where professionals take money off the table. They'll look at weekly charts, daily charts. I don't know what they all do, but I'm telling you as a group, that's what I found over the years that this market says is going on. So it got there. Where would support be? Back at the 18-week average. But if you want to keep the trend up with momentum, you've got to not take out this number right here. And what the market did this week, and remember we had central bank meetings all over the place, is it did that. You're back to neutral in this market and sort of sitting there. And by the way, this is the news that we get in our different pages through here. So as I'm looking at the markets, what we're going to be studying this weekend is what happened today as the president, when he was talking and he had the Australian Prime Minister next to him. I thought that the trade with the U.S. was going so much better. It was due to end yesterday. They were still here, and they were supposed to leave for the Midwest. Well, I'm going to talk about it Monday morning, and I'll have this out before the markets get going. I typically start recording before 6 a.m. Central Daylight Time. Depending on your time zone, it'll generally be out before 7 a.m. Central Daylight Time for you. My charts look different than the ones that you see here. Number one, I'm not on these. This is how they're going to look, and you got to envision. You're sitting next to me. I'm going to go through 40 charts. I'm going to keep them in a certain order every time. I'm going to also have ETFs in there, and my idea there is to tell you what I'm seeing in the trade, what I think you should do with yours. I don't know if you're long or short already. I don't know if you're involved in the market, but I'm going to come out and say, here's the reasons to get out, or here's reasons get into this market now. Here's the stop areas. Here's the objectives that I'm seeing. I'm going to throw that at you before your day even gets going. Now, you can view it at any time because it's on our website. And by the way, included in this subscription is our free to you application. It works on your smartphone and, of course, your Android phones. That's $40 a month by itself. It's thrown in. This is the exact sequence that I cover each time, and there'll be a slide bar. As you go over, it pops out metals, grains, softs, energies. Wherever you want to go, just drop it there. It starts playing like that. And the reason is I'm covering so much territory for everybody. And instead of making a video for metals and a video for this, I'll do one, and I make it easy to get around. There's a charge for it. What's the minimum tick in gold? One tick, right? $10. The cost for this for the first 30 days is $7.95. After that, two choices. You can, well, actually three. You can not take it, you're done. You can go every 30 days for a $15 charge, or if you can sign up for a 1-year subscription at the equivalent of $13, you just pay that up front for the next 12 months. I make it so simple for you. Now think about what I just said. A full dollar in gold is $100. I'm not trying to get rich at this. I'm trying to give you reasons to help with trades, ideally, give you trade ideas. Ideally, I'd love to be your broker, ideally. Go to our website to find out more. Under the word market research, you're going to see Ira's morning subscriber video. Just click on it. We have a fact sheet. It explains it. As you scroll down the page, everything gets explained to you as to how it works. You can sign up, and I'll get these to you starting right after you sign up for it. Our next business day is Monday, so that's when you'll get your passwords, everything you need, and I'll be sending you at that point an invite to download for your phone what you need, and you can watch it there. And by the way, I don't use text. I use push notification when it comes out. So whatever I put out for you in research, it'll be a push notification. Hit it. The app opens automatically, and away you go. Click here if you want to get there, if you're watching me on YouTube, and obviously here. And by the way, this works in Europe, everywhere else. I'm Ira Epstein. You have a great day, and I will see you all Monday.